Hello again. Nice to have you watching. Lots going on this afternoon, so I thought I'd take a little look at gold and silver. And also coming up this weekend, I'm working on some charts for the US dollar and also how the US dollar relates to the Swiss franc and what that's telling us about the developing precious metals and commodities bull market. So if you'd like to see that, you can click on the link on my Twitter feed. Of course, it's the link here, the Silver Chartist link, where I will be putting my charts, and hopefully you'll be enjoying them. It's a free newsletter. You can sign up if you like to, and the free version will be showing my some of my charts as well. So feel free to have a look at that. But let's have a look at gold and how it's doing at the moment. And we've got some kind of knee-jerk reaction going on, I think, to some data coming out of the United States to do with employment and the economy. All of this with the background of Joe Biden's announcement yesterday around $1.9 trillion of stimulus. So short-term knee-jerk reactions to the downside, but the long-term picture for a whole host of reasons is very bullish. What we're seeing at the moment, I think, is a culmination of the correction that's been going on since last summer, of course, and a lot of people turning bearish on the metals, which is what you want before the next big leg up, of course. So we've moved up from $1,050 all the way up to over $2,000, and reacting back down to $1,700 if we get that far would be nothing unusual before the next acceleration upwards to towards $2,500. So those people that are turning very bearish at the moment are completely missing the point that the idea is you want to buy low and sell high. I'm an advocate of buy, hold, and add-on weakness, which I've said many, many times. So I bought my precious metals related miners when we were down at around about $1,200, and I've just been adding all the way up. And this correction is no different. When we get to these low points, I added here, added some positions, and if we drop down to 1700 and I've got any money left, I'll be adding some positions at that point as well. But a lot of my miners have been holding up really well, and in fact haven't even corrected at all. Just take a look at the chart for Greatland Gold, for example, and also, of course, the uranium sector, which I've been posting heavily about on Twitter, has just continued up and up and up with movements of over 100% over the last few weeks, of course. So, but going back to gold, we're getting a downside reaction here, and this chart pattern here was a little bit of a bear flag, I think. When you zoom in on a smaller time frame, it does look like a bear flag. So this arc could hold and the price could bounce off it and move upwards, but it's just as likely that the arc ends up being somewhat lower down and more stretched. I don't know, something like that, or I mean, we don't really know yet just whether an arc is applicable, but certainly the downtrend channel is, with a false breakout up here, and we can see the stochastic is getting into the low zone now. So we're homing in, I think, towards the end of this month at some sort of a turnaround, I think, and a more definite rapid reaction to the upside. So it's a case of watch this space at the moment. Wouldn't surprise me at all, as I've said many times on Twitter, if price was to move down to the bottom of this channel. We'll see. It's a case of sit and wait at the moment. We could see the fundamentals starting to kick in at any point, of course. But it's a case of watch and wait, hold your positions, and if we do drop and you're in a position to add, then add. But as I said, that did look like a little bit of a bear flag there, and we could be moving down to around about the 1703 level. I'll be watching the edge of this arc, which could be anywhere around about $1,800, I think. It's also a key psychological level. And if we break that, then somewhere closer to 1700 is highly likely. The silver chart, as price continues downwards, looks a little bit different. We've broken out of the channel, of course, and I've been watching what potentially a bullish flag here and watching the price action as it gets to around about 24.20. So if we stop around about 24.20 and then move upwards, then that'll be a very positive sign. But again, of course, the arc could be extended and we could see price continuing to fall for a little bit longer. Could see the arc something something like that, and you could be drawing it on the wicks of the candles here rather than on the body of the candle, which could see price coming down further. Heaven forbid that we come all the way down to test the bottom of the channel again. really don't think that's going to happen, but if it were to happen, it would be around about $19 or just below. Well, actually, given the time it would take to get down there, it'd probably be nearer to $18 in this horizontal support level. I don't see that happening myself personally, but it's a non-zero possibility. Perhaps around about, in my view, perhaps around about 10 to 20% possibility it comes all the way down to here. I would say it's more likely it bounces off perhaps the point where the support line of the channel and the arc coincide, somewhere around about $22, but all of that remains to be seen. You could see something like a channel a bit like that, for example. But yeah, it remains to be seen whether we go down that far. My expectation was that it would bounce rather quicker than that and accelerate to the upside. Of course, the next point we're looking at is the psychological $30 level, and a measured move using the height of that flagpole takes us to just above $30. So it'd be good to see a consolidation taking place, probably just above the that sort of psychological level, pulling the price back, and then taking off to the upside and moving to $40 plus, and the psychological level again of $50, which wouldn't surprise me at all if we reach that before the end of the first quarter of this year. But certainly the $30 level is next in our sights, just over $30. So that's about all I have to say on that at the moment. I suppose I should mention the breakout level. I mean, if we were to break to the upside, it'd be around about $25.5 to $26. And I think I mentioned the support levels down here around about $23, and then all the way down to around about $18. So that's what I'm watching at the moment, and more on this in relation to what the US dollar is telling us and what the Swiss franc and the US dollar pair is telling us over the coming weeks and months, and that'll appear in the newsletter, as I say. And once again, thanks for watching and listening, and see you next time.